ANM, American Northwest Magazine. Please subscribe. Good morning and welcome to American Northwest Magazine and ANM Financial Channel. Today is 8:23 a.m. on 3/18/2026. I believe that's a Wednesday. It is. And this is Pacific time. 8:24 a.m. Pacific time. So let's take a look at the U.S. markets today. Gold futures. We're down a couple $100 from yesterday. And on the day, down 2.5%. U.S. dollar index is up, which is accounting for a little bit of that loss in gold, as well as the entire market. Bitcoin dominance is down, which means altcoins are doing a little better than crypto today, or excuse me, a little better than Bitcoin today. So the S&P 500 is down 0.5%. It's trying to recover. NASDAQ down 1/3%. Dow Jones is down 0.8%. West Texas oil is coming down a little, off of $100 a barrel. And again, just to look back a couple weeks ago, oil was down at way down there. So we started going up. This is, I believe, when the war started. And it came down when they announced that they're releasing strategic reserves. And it's going back up again. So we got up to $111 for West Texas crude. And again, West Texas crude oil does not come out of the Gulf. Obviously it comes out of Texas, but because supply is down, demand is up, therefore they're making more money. It's not costing them anymore, they're just making more money. And I know there's a proposal, I don't know if it's a bill yet. Yeah, I think it's just a proposal from some influencers that during this time, while these oil companies are going to be making a lot more money, especially, like the Texas oil companies, they're going to be making more money, yet it's not going to cost them anything more. So there should be a 75% tax on that extra price, that extra revenue that they're getting. I'm all for that. So because there's really no progress in the Gulf and the Strait of Hormuz, it's quite a static situation there. The economy's probably going to contract significantly. Well, It could be significant if this is prolonged. When I say prolonged, more than a few more weeks. The only way I see the economy, or to prevent a recession, I should say, from happening would be that Iran does surrender, or there's a peace deal, and the threat at the Strait of Hormuz is gone. And again, it's only 20% of the world's oil, but there's also fertilizer and other things that come out of there that can affect the economy. Bitcoin, it's down. For me, it's a relief it's down, because I am not positioned for it to go up. I'm expecting it to come down into the mid 60s and possibly significantly lower, but I don't want to get caught. I don't want to get caught being outside of Bitcoin. So I am seriously considering dollar cost averaging beginning today. In fact, looking at the RSI right now, I'm going to wait for it to come down a little bit, down to here. Volume is pretty low, so it might take a while for that to happen. Bitcoin's liquidation map, or heat map. There doesn't seem to be any liquidity down here, so it can just keep dropping. If it goes up, looks like the best we can do is mid 73s. That's where the liquidity is there, or the resistance. And let's refresh this. So on this liquidation map, price currently 71,200 on Bitcoin. It looks like we have a lot more shorts than longs, so I anticipate the price could get pushed up. So it's probably a good time to do some dollar cost averaging right now into Bitcoin. You know what? We just looked at the 1-day chart. So today, it looks like the price should recover a little bit. There is the incentive of the market makers to push the price up and liquidate these leveraged longs. Could actually get up as high as 75,000. So I think it's probably prudent to do some dollar cost averaging into Bitcoin now. Again, this is not financial advice. I'm not an advisor. That's just what I'm doing. I am going to dollar cost average into Bitcoin, Solana, and Ethereum. So let's look at 7-day chart. Longs and shorts look about equal at around 1.7 billion each. And let's look at the 30-day. So based on this chart, I would not expect much to happen over the next 7 days with the price, other than macro events, of course. And here on the 30-day chart, the longs are more than the shorts by about 25%. So going forward over the next 30 days, I think the price will drop. Market makers will push the price down to liquidate all these leveraged longs. As you can see, we could get down into the 60s. Take a look at the news. And by the way, today at 2:30, I believe, we've got an FOMC meeting. And the expectation there is that interest rates will not come down. I think it's up 90% that they won't come down. So we won't expect any change there. Do you think they'll actually bring interest rates up? That's touchy. If they do that, I think we'll have a significant correction in all the markets. Maybe even especially Bitcoin and crypto. But I expect them to not change the interest rates going forward. Ghana central bank cuts policy rate by 150 basis points. So they've actually brought interest rates down, but look how high theirs are. Bitcoin risks drop below 70K. What the hell does that mean? As hot PPI sparks market sell-off. U.S. crude inventories jump much more than expected. A report released by the Energy Information Administration on Wednesday showed crude oil inventories in the U.S. jumped by more than expected in the week ended March 13th. U.S. crude oil inventories remain about 1% below the 5-year average for this time of year. That doesn't seem significant. U.S. factory orders barely rise in January. Well, I think that's all we have for today. Thank you for watching. I'm going to be dollar cost averaging into Bitcoin, Ethereum, and Solana, and maybe a couple other cryptos such as SWI and Near Protocol. ANM, American Northwest Magazine. Please subscribe. Thank you for watching.